growth, solid 13% year over year. So your margin decline is there, but it's not major, and that is one big positive coming straight through right off the bat. When I'm looking at your GNPAs and NPAs as well, NNPA largely flat, just 1 basis point higher on that count, but the GNPA has declined by around 18 basis points, which also looks definitely good right off the bat. You know, I'm going to try and look at the absolute GNPA number as well. That has declined as well, so that's a positive. The absolute net NPA number though has gone up, so need to try and understand why that is. Your ROAs have come in at around 2.32%. I have Vishy with me, in fact, who's of course got the fine print of those numbers. Vishy, why don't you give us a breakdown of that?
Right, Harsh. So as we reported earlier, that the net profit number is of course beating any kind of estimates that the analysts had on this number, 10,271 odd crore, roughly about 23.5% up year on year. We're looking at a net interest income rising as well, about 13.4%. But better than the net interest income is the other income portion of the portfolio. So there, of course, you're probably seeing better forex income, which has been the fact for most of the private banks that have announced their results. Essentially there, the other income is up about 21 odd percent. You're also seeing a dip in provisions, which is a slightly new thing as far as some of the larger private banks go, because most other banks have reported higher provisions for the quarter than even a year ago or a quarter ago, primarily driven by investments in AIFs and banks providing against them. In ICICI Bank's case, so far I'm not seeing any kind of AIF related provisions yet. We may find out a little later when the management comes on the conference call. As far as credit growth go, net domestic advances are up about 18.8%, roughly 19%. There the portfolio has gone up, primarily driven by the retail portfolio, which is up about 21 odd percent. Even on the deposit front, you're seeing total period in deposits up about 18.7%. So deposit growth matching credit growth, which was something that has been missing across other private sector banks. So here at ICICI Bank, you're seeing those rates matching. As far as the number, the actual number goes, there's about a 2.9% sequential rise. Net interest margin also you announced earlier. I was listening to you when you said that the number has not declined as much as what we would have seen in some of the other banks. So obviously all of those add up to be quite a positive for ICICI Bank. Of course, the results are coming in right after the market close. So whatever market movement we'll see that on Tuesday.
Absolutely, Vishy. What do you make of this? You know, I'm seeing a very interesting trend coming in from ICICI Bank. You know, we've seen consistently, Vishy, that ICICI Bank has delivered more on the loan growth. They've not ever gone overboard with regard to loan growth, but they've grown at a consistent late teens kind of a pace. And what's even more interesting in terms of a trend is I've seen their deposit growth also doing very, very well over the last few quarters. It looks like this story seems to be changing fundamentally and consistently.
Yeah, so you know, as most other banks have been reporting, there is a clear gap between advances and deposit growth. But in the ICICI Bank case, that's the important part, that those rates are matching each other. What is interesting to see is that within the CASA deposit base, now I was just looking at the numbers, the average current account deposits have risen by about 11.6%. However, the savings account deposits, they are up only about 2.8% year on year. So that pressure is showing on ICICI Bank's portfolio as well, where people are probably moving their CASA deposits into term deposits, to fixed deposits, which is likely being seen on the ICICI portfolio as well. In terms of the advances growth now, ICICI Bank has repeatedly stated that they have no preference for any kind of a sector or any kind of lending group. They have specifically said as long as a borrower meets our return ratios, meets our requirement, we are happy to lend that money. So that's somewhat of what is playing out on the advances portfolio as well, where you're seeing this consistent late teens growth, as you mentioned, playing out through even in the third quarter. What we need to see is any kind of management guidance on where they want to grow next, whether suddenly the focus shifts towards deposit growth outpacing loan growth. that is something that we have to watch out for. Of course, ICICI Bank does not have the problem that HDFC Bank has, which is a high loan deposit ratio. So that doesn't exist for ICICI. They can continue to grow at this level. Even if they choose to change that strategy a little bit, it will be something to watch out for.
Absolutely. Thank you for all of that perspective, Vishy. We'll let you go on that one. But, overall, as well as Vishy was correctly pointing out, that late teens growth is definitely a positive. But, when I'm looking at it sequentially, he's absolutely right from a perspective that ICICI does not require that kind of deposit growth traction which an HDFC requires. ICICI has grown on a sequential basis, just to give more perspective, at 4% on the advances side of things. The deposit side has grown at roughly 2.7% sequential, as in the current set of numbers that they've disclosed. So clearly advances is outpacing deposits. That continues to be the case, but not by much. A 2.7, 2.8% kind of deposit growth sequentially is very, very healthy. And on a year-on-year basis, definitely the deposits have outpaced loans. So that's the other big positive. But let me also bring in Sunny Agarwal, who's the head of fundamental research at SBI Cap Securities. Welcome, Sunny, on NDTV Profit.
Yeah, thanks, and good afternoon, everyone.
Hi, good afternoon. Sunny, talk to us about those numbers. A NIM decline of just about 10 basis points clocked in by ICICI. Now the NIM has come out from that 4.78% number to 4.53 in the last quarter, and now the decline is reducing, which is a positive. You are seeing deposit growth also come through, 18.7% year over year. You're seeing advances roughly 18 to 19% up year over year. So you're seeing this engine move along quite steadily. But what are your views, and what is the result compared to what your preview was?
Yeah, definitely what I feel that results are in line with expectation and far better than other banking peers. So deposit growing by 19% year over a year, at the same time, credit growth growth of 19% and deposit growth of almost 18.7%, almost inline growth on a year-on-year basis. So I think that's and at the same time the pressure on the NIM seems to be not much. And I was going through asset quality numbers also. Even there we have seen inline number. So I think overall a pretty inline set of number. And what I feel is that post this result, maybe ICICI Bank will take a leadership as far as large cap banking company or large cap banks are concerned.
Sure. Sunny, if I can differentiate between how ICICI, Kotak and HDFC have done with regard to their deposit growth. Kotak and ICICI seem to have done very, very well, while HDFC seems to be lagging in terms of its number. Even when I'm looking at it sequentially, what do you think seems to be going in favor of an ICICI and a Kotak, despite them not opening a commensurate number of branches that HDFC seems to be opening? So where is it that they're getting that formula right, especially on ICICI, given that the numbers have just come out?
I think rather than, for HDFC, we all know that the pressure point is more because of the merger. And in fact, HDFC Bank also has got many levers with them to boost the NIM. So obviously that all those levers will play out over the next 2 to 3 quarters. But having said that, there was no such one-off event with Kotak and ICICI Bank. And they continue to do well both on retail side as well as on corporate side. At the same time, the focus on high-yielding products, I believe that is delivering a better number for ICICI and Kotak. And even in addition to that, the focus on digitization, digital transactions, those things are also working for both these banks. Maybe HDFC Bank, because of this one-off event, we have seen the synergies which were expected to come in this quarter has been delayed by a quarter or two.
Understood. And do you now believe that the margin contraction cycle is a quarter away, 2 quarters away? How far are we where margins will continue to be in focus and margin contraction will continue in your view?
What I feel is that margin contraction is something which was known to the street, as we all know that with a high credit to deposit ratio, obviously all the banks are running behind mobilizing the deposits, and that is leading to the increase in cost of funds for all these banks, right? But having said that, what I feel is that maybe a quarter or two is a time where we will see margin stabilizing, and post that, in case there is a rate cut, then we may again see this margin gradually inching up. So maybe quarter or two, again, it's a well-known fact, nothing surprising over here.
Sure, quarter or two to go as per Sunny. Sunny, I'll come back to specifics in terms of ICICI's numbers. I see the provisioning not go up as much as one would expect given the AIF provisions that most banks have made. What's your sense of the provisions number? Do you believe that AIF needs to still come in? Have they not provided for it? Is this number looking slightly lower as per what your estimates were looking?
No, so I think I would like to hear this from management, what exactly has gone in the provisioning, because I was going through the press release and I couldn't find anything pertaining to provisioning. So maybe a clarity is required from the management, and maybe during the analyst call we will get to hear on this number.
Right. Thank you so much for that view and perspective, Sunny. Of course, ICICI seems to have delivered a very stable, very inline set. In fact, if anything, slightly better than what most on the street were expecting. The ROA seemed to be maintained. The NIMs seem to have held up quite well. Of course, 10 basis point decline, but held up quite well. Thank you for all of that perspective, Sunny, with regard to both ICICI as well as the banking sector as a whole. Stay tuned to NDTV Profit. We'll continue to get you more on the other side of this short break.